Hi, I'm Matthew May, the Tech CPA from Acuity. One of the big questions we get is, what is my income statement? Or what's the difference between an income statement, a profit and loss, or a statement of operations? Well, first of all, those are all the same things. But more often than not, they still don't make sense to entrepreneurs. So let's spend a little bit of time breaking down how those should look, some of the tweaks you should make to make those make sense to you, because that's one of the main financial statements you're going to want to make decision from as an entrepreneur. Now, most of you probably are more familiar with their P&L, income statement, profit and loss, a lot of names people use for that one. Let's talk about the complexity that is most people's income statement. It's usually a terribly complex document, and we want to break it down and almost start over from the beginning to make it as simple as possible for you to get meaningful insights in your business. Question we get a lot of times is like, kind of just give me a baseline, Matthew, of like what we should be tracking, right? So we have two reasons you track an item. First, only do what's required. And for most of us in compliance, most of us, that's a tax return. So it looks something like this. If you look at this, there's only a dozen lines of expenses that you track, and really in this top section, there's only really one line you have to track. So that's like about 12 or 13 things that you have to track. So that's from the compliance side, that's kind of the baseline of what you have to track. So if your P&L looks messier than that and it's driving you nuts, just have people merge it or clean it up. And then you only add complexity if it helps you make a business decision. For example, in my business, one of the things I do like to track separately on the face of the P&L is to look at customer acquisition costs and PPC in particular. So I want that separated out from some of those things. So that's a perfectly fine explanation or reason for adding a line to your income statement. As you go through, remember, you're trying to simplify things. You're trying to make this a document that's meaningful to you, but still be compliant with the IRS. One of the things I encourage people to do, since they are more comfortable, is challenge how they're reviewing their business. So this is an example of a business, and this is 6 months of business activity. And a lot of people, when they're looking at their business, they're just looking at one column at a time. So there's really some kind of 50,000 foot things you can see about this business. You can see it's generally profitable. There's some operating income and things like that. You can see generally what sales and marketing is, but it's really not a meaningful report. So I'll really encourage you guys to start looking at the 6-month trend. This is the same exact business, and just look at the kind of questions you can ask. You can look, for example, at the revenue line item, the second revenue line item. You can see, oh, I need to dig on March and July because it's really out of whack with the other months. Or you could go down and look in sales and marketing and really investigate why July had a big hit, especially since July was the low revenue month. That doesn't make sense, right? So I highly recommend looking at a 6-month P&L, and all of the tools we've talked about do this. Hopefully some of those tips were helpful and even maybe reprogrammed your kind of month-end schedule of how you look at things. If you have more questions, we've got a series on what's a balance sheet, simple rules that you can put in place to make doing your financials easier. We got one on KPIs and a bunch of the tax issues of the day that are out there.